People are always fighting online over whether this or that is an asset or a liability. We're going to settle all beefs here today. The term we're going to be talking about today is asset. An asset by definition is a resource with economic value, such as property or possession, that is owned by a person, business, or organization and is expected to provide a future benefit. This can be something you can physically touch, like a gold bar or a house, or it can be a non-physical item like a patent, brand name, or copyright, and it can also be financial like stocks, shares, and bonds. Now, usually when we think about investing, we usually talk about stocks and shares or property, but there are a load of different ways in which you can invest your money. Buying physical gold, for example, is a great form of investment for some people. Another that I have seen close people around me make a lot of money from is trading card games. I can respect it, but I just don't understand it. But when you're investing in these assets that you hope to gain future benefit for you, you need to understand their respective markets. Those who invest in stocks and shares will research and get to know very well the stock market. They will study what affects the stocks that they're interested in buying and how the market is changing in real time, as well as how it has reacted to changes in the past. And it works the exact same for other asset classes. Those who invest in property will constantly be looking at property prices and identifying how legislation, local developments, and people's opinions are changing to determine how to manage their property assets. This studying of the market will allow you the best chance of investing in an asset and not a liability, because not all investments are automatically assets. Sometimes it just doesn't work out how you want it to and ends up costing you way more than it ever made you, which is why research is so important. But as we covered yesterday when we were talking about diversification, a shrewd investor will want to make sure that they are invested in a few different things to spread their risk. The different assets you invest in are known as your asset allocation, and these are going to be dependent on your personal situation. Maybe you need to invest in things that you can easily convert back to cash to use if needed. These assets are called liquid investments because, much like a liquid, it can easily change shape and form as needed. These investments can include stocks and shares and short-term government bonds. But maybe you aren't concerned with turning your investments into cash very quickly and you would rather a more long-term approach to your investments. These kind of investments are called illiquid investments and include property which would take a while for you to sell and get your cash back. My current asset allocation is split between my stocks and shares ISA, pension, and property. This gives me a balance of both liquid and illiquid assets, which is right for me right now. When you are looking at investing, you need to think about your current situation, the assets you can invest in, and your desired asset allocation. Congratulations! Day 4 of 30 investing terms you should know is complete. If they wanted to teach you, they would, but they won't, so I will. See you guys tomorrow for our next lesson.